Welcome, Tiffany. Let's start with Olaplex. 11.
Hi, Tyler.
Good to have you with us. 11% pop in 3 days following a very rough Monday. I had a rough Monday, too.
Yeah, I think we all did.
Yeah.
So listen, I tend to look at stocks along the lines of balance sheets and business models, and Olaplex is one that I really like here. I definitely own it. I've been using the product for, gosh, I don't want to date myself. But what I really like about this business model is that that they actually have proprietary technology. So I don't know if you get your hair colored, Tyler, but I certainly do, and a lot of Americans do, a lot of people around the world do. And what they do, everybody who knows, if you get your hair colored, especially if you are bleaching it, it really damages your hair. So Olaplex has this patented technology that bonds your hair. A couple of other companies have tried to kind of mimic that, and nothing really comes close. So also the thing I like about their business model is it really starts with the salon service. So all of the professional hairstylists are using it, but then they have this take home. Like number 3 is what they call it, that you have to use after you get your salon service. And now they've actually expanded their product line. They have a couple of SKUs that are really doing well in places like Sephora. So I like that. Balance sheet perspective, sales are up 58%. In the last quarter, they just reported a couple weeks ago. Yeah. Margins 78%, and so I think the stock is really inexpensive right now. So it's definitely a buy for me if you don't own it.
Well, you've given my secret up. This is how I get my perfect shade of gray here. We call it, what am I? Anyhow, thank you.
Olaplex.
Olaplex.
Let's talk Carvana, Tiffany. The stock up more than 20% this morning before selling off 24% higher yesterday. What do you do with it?
Yeah. So. Again, getting back to balance sheets and business models, I really do like the business model of Carvana, but then we take a day like yesterday, right, where the stock hits a low, and then also like in one single session, then look at like the trading volume, right? So the average trading volume is usually around like 9 million. Yesterday was about 41 million. They had to halt trading 4 times yesterday. That makes me a little bit nervous. And then when you factor in the fact that about 30% of their shares are sold short, and that really, they're really kind of pushing up in meme stock territory. It makes me very uncomfortable, dangerously close to that meme stock territory. All right. And then I really want to stay away from those names.
Let's move on very quickly as we are coming up on the end of the hour to Teladoc. 2 days of back-to-back pops, 7%. What do you think?
Yeah, well, first of all, it's about time. So for those of you who bought Teladoc in 2020 and were really excited about it flying high, 2021 was really not a good look for the stock. And so I've been right with you along for that ride. So again, from a business model perspective, we really like it. It's a leader in telehealth, and they really know the space really well. But getting to balance sheets really quickly, they actually have increased their revenue and their users pretty fast, but they actually reported about a $6.7 billion loss last quarter. But I really, when you kind of pull back the veil, it was not a cash loss. They actually acquired a company called Livongo in 2020. And really what this loss was something called a goodwill impairment. So that really refers to, not to get too technical, but it really refers to the aspects of a company that really don't show up on a balance sheet, right? So like the value of like brand, value of like the brand or the intellectual property. So they wrote that down, but it really wasn't a cash loss. So it's almost, it's real, but not totally real.
Kind of an accounting
I would absolutely
loss, I
think
guess.
About Teladoc here.
Kind of an
accounting loss.
All right, Tiffany, thank you so much. Have a great weekend. Appreciate it.